Welcome to The Point of View. This is your favorite current affairs show on Channel 1 television. On The Point of View, we get the right guests to speak to the right topics by asking them relevant questions. Tonight we have 4 questions. What is behind the recent surge in the value of the cedi, right? How different is this surge from previous ones? What is the nature of the surge of the cedi against its major trade partners? And the million-dollar question, how long will this last? I have 2 very insightful guests. First one is the Chief Investment Officer of the Black Star Group, Ajay Boateng. He's joined us for the first time on Channel 1 with some very powerful charts. I would also be joined by Professor Theo Echampong, who's an economist, to try and answer those 4 important questions. Stay with us.
Smile. Pregnant and experiencing oral health changes? Hi, I'm Tanya from Bethel Dental Clinic, Ghana. Pregnancy is a beautiful journey, but it can bring about hormonal shifts that affect your oral health. During pregnancy, maintaining good dental health is important, not just for the mother, but also for the baby's well-being. Try to maintain good oral health routines. That includes brushing twice daily with fluoride toothpaste, floss daily, and use mouthwash if recommended. Please remember that it is safe for pregnant women to visit the dentist for routine checkups, cleanings, and emergency treatments. Bethel Dental Clinic, your partner in prenatal dental health for a healthy pregnancy and a healthy baby.
Healthy smile.
Where to get polytank?
Oh, and you're fine.
Go straight.
No, I want to left, right.
And you that's right. Ghana na ye wono. So when you do more, and ye data. Who knows? I mean, na here. Make a polytank at all. And you just come in here by you to be able to buy you. Or food to be at the enjoy you kura.
Akuya bulambo kotoman. Emua.
Like that they took my eyes. Them to be the go to the distributor and you give the original polytank. Polytank. Come on, you hear the sound?
Polytank, Papa Nankasa Nkasa.
Welcome back. So tonight I have at least 4 questions to be answered. What is the nature of the current surge of the Ghana cedi? Is it just against the USD? Is it appreciating against the pound and euro as well? Number 2, how does this surge compare with historical patterns? So we'll go far back, probably to redenomination, maybe more. How has the currency behaved over the past 30 years, over the past 15 years? Of course, then in that question will be how different is this from previous episodes? Then, of course, the more important question is what are the factors behind the current surge in the cedi's value against its major trade partners? And then finally, how long will this last? Is this a short honeymoon or is it going to be a big one? So those are the 4 questions. What is the nature of the current surge? What does the history say? What are the causes of the current surge? And how long will it last? Now, I have 2 people. I have Ajay Boateng is I call him the lead analyst for the Black Star Group. Black Star Group is one of the world's most recognized faces when it comes to investment advisory and the rest of it. Ajay, great to have you.
Nice to meet you.
I forced you to come on Ghana television. I know you do different kinds of things, but thanks so much for being here. Theo Echampong is also an economist. He's joining us from his base in the UK. He's been writing about this as well. So I'm going to start with the first question, which is, what is going on? All right, is 1 month enough to get excited? Today, the Ghana Union Traders Association issued a statement asking their members to reduce prices because they say when the cedi depreciates, you raise your prices. Now that we have had 1 month sustained appreciation, reduce your prices. S&P have said that they believe that this will continue till maybe the 4th quarter of the year. So there are various people saying different things. So what I'm going to do, I'm going to go to the screen with Ajay Boateng, and we're going to first understand the nature of the current surge. Is it just a dollar issue, or is it with other currencies as well? So Ajay, thank you for being on the show. By the way, tell me about Blackstar. What do you guys do?
Oh, Blackstar is an asset management / an advisory / a brokerage firm in Ghana.
Okay.
We were set up in 2007.
Okay.
We continue to sort of operate. And we've sort of taken a seat back to try and sort of understand Ghana's economy and the challenges that it faces, and trying to offer solutions and products and services that address some of these challenges.
The biggest incident in the past year has been the 2024 election. So I want you to first walk me through how the Cedi has behaved between December 2024 and end of last month.
Sure.
So we can get a picture of whether this is just a dollar issue, a euro issue, a pound issue, or all currencies. So for that, I want you to go with me to the screen and help me appreciate what's going on. So you are saying that the Ghana Cedi shows strong performance against the greenback is the dollar, right?
Yes, that's correct.
Now, can you explain the 3 lines and what's going on here?
Yes, so the 3 lines, the white one is the dollar, the gold one is the Cedi versus the pound, and then the gray one at the bottom is the Cedi versus the euro.
Good.
And what we saw is at the start of the year, there was a gradual depreciation all the way, but at some point it stabilized a little bit versus the dollar. And then what we realized was that just literally about a month ago, we've seen like a huge surge. Then what this chart shows is that like actually it's not just against the dollar, it is also surging against the pound and the euro. In fact, actually, if you look at just a month from today, the Cedi has actually strengthened a lot stronger versus the euro than actually the dollar.
So let me get this straight. This is the percentage of depreciation or appreciation.
Yes.
So it depreciated all the way through to maybe the 2nd week of April.
Yes, that's
2025.
Yeah.
Then from the 3rd week of April, we started seeing an appreciation.
Yes.
It even went above the 0 line.
Yes, absolutely.
So by end of April, the Cedi was close to 8% appreciation against the dollar.
Yes.
Amazing. And you're saying that if we continue this, it strengthened even further against the pound than even against the dollar.
No, it's strengthening a lot stronger against the euro.
Against the euro?
Yes. So as of today, if you look at it as of today over the last month, it's strengthened against the euro about 17.6, and then the dollar is a little bit lower in the last month.
So for May, these figures are all higher and on the positive side. So euro is positive. So Cedi is doing better against its 3 major trade partners.
Yes, absolutely.
So I read a story on Reuters Business which said that the dollar was suffering against a lot of its trade peers.
Yes.
The Taiwan, the yen, China, Japan, all of that. So initially we had thought that the Cedi against the dollar was benefiting from that structure, maybe the Trump tariff, dollar uncertainty.
Yeah.
But what you're telling me is that if that were true, it wouldn't have applied to these other two. If that were the only reason.
Yes, and I think you're spot on in that sense. So generally, there's a lot of correlations among currencies. So the strength of one currency often sort of overlays versus others. So generally, if you're strengthening against one currency, normally the hard currencies, what you often see is that like it's also reflective of some of the other hard currencies as well.
Now, because we've shown, I like the way we've done the quarters. So this is election. So even though Mahama is elected in January, it doesn't really change the trend all the way till April.
Yes.
Good. But I also noticed that you've done this in quarters.
Yes, we have.
So I wanted you to, is it possible to say that the Cedi's behavior against its trade partners is quarter sensitive?
Yes, I mean you have to look at the data and then be able to sort of make an informed decision. So if you go to,
so please take me to slide number 12 and let me just see something. Slide number 12. I just want to check something. Slide number 12. Whether it's quarter sensitive or not.
Yes.
So what is going on here?
So we looked at this over the last 5 years or so, and what we realized that in the last quarter, so from October to December, the Cedi often tends to be a little bit more stronger. Now, for obvious reasons.
So green means Cedi strong.
Yes, it's appreciated.
Red means Cedi weak.
Yes.
or depreciating.
Exactly.
And you're taking 2020, 2025.
Yes.
So you've taken quarters for the past 5 years.
Yes.
And when you run it, quarter 4 is the best.
Is the best generally. And when we look at the average, often Q1 for the first quarter, the first 3 months every year tends to be where we see a lot of the depreciation. Again, for obvious reasons, dividends being paid. Some of the multinational might repatriate some money outside. So typically, that's when we tend to see a lot more depreciation, followed by the third quarter. Generally, that's the.
So you will see depreciation in March.
Yes.
You will see depreciation possibly in August.
Yes.
And by the way, 2022, it was July, August that everything crumbled.
Yes, absolutely. So 2022, we saw it here, it depreciated around 22.
So on this 5-year chart,
yes,
the worst quarter for Ghana was Q3 2022.
Absolutely.
Without a doubt.
Yes.
But generally, these are the 2 worst quarters.
Yes, generally.
Dividends being sent out,
yeah,
and then final quarter.
Yes.
So what we're seeing with appreciation in Q2, is it regular?
I mean, when you look at the last sort of couple of quarters, or over the last sort of 5-6 years, I mean, we don't tend to see too much depreciation per se. It's perhaps our second best quarter. But I think historically, when you look at it, we often see some depreciation. So what is happening, I mean, the quarter hasn't ended yet, but what is happening is actually very, very positive for this quarter.
Let me just explain this again. Because we are in Q2
yes,
of 2025, this is a 0.
Yes, for now.
For now. We've left these 2 blank because we are not yet in 2025 Q3, 2025 Q4. So what Speaker is saying is that Cedi depreciated against the dollar by 5%.
Yes.
So if you look at this, the average for the year for now is 5.
Yes.
If this trend continues and we start doing better, this may be a positive.
Yes, absolutely.
So it will be the first year in the 5 years that we don't depreciate.
Yes. In fact, you can even extend this a little bit more further. In fact, I think based on some of the numbers that we're seeing, it is possible that this might be one of the first year that the city actually overall appreciate over, if you look at it in the last maybe say 24 years.
Wow.
In the course of the year, if we can sustain.
So if we assume we sustain this so that end of Q2,
yes,
we are positive.
Yes.
That would be unprecedented.
Yes.
Because I don't see any of this being positive except 1, 2, 3, 4, 5.
Yes. So the nature of the strengthening is also important. So I think when you listen to what some of the conversation that the governor has been saying, I think they're paying a lot more attention to inflows. You know, they're strengthening the inflows. So the nature of the whole thing is supply and demand. So if you can position yourself in a situation where the country as a whole is able to structure how inflows comes into the country in terms of dollars, I think, you know, there's a
Why
high
are Q4s better than the other Qs? Because the average for Q4 for the 5 years,
yeah,
clearly there are more greens.
Yes.
What is it about so Q4 is October, November, December.
Yes, that's correct.
Why are they better than the previous quarters?
So Q4 is for obvious reasons. So a lot of our brothers and sisters who are abroad who often come in.
They send money.
Yes,
and
they
also
send
come
money.
and spend.
They come and spend. So
30 December.
Exactly.
Oh.
So that often feeds in a lot, and there's a lot of activities. So you know, all of that feeds into strong Q4. So even the years where we've seen some depreciation in the quarters is often quite small. So generally, there's a lot more remittances coming in. The dirty December and other activities often ensures that our brothers and sisters abroad often comes in. So often, historically, that has been quite positive.
So for the past 5 years, our worst year for depreciation was 2022.
Yes.
Almost 40% depreciation.
Yes, that's correct.
Followed by 2024.
Yes.
The election year. Then 2023, the year before. This was quite tough time for us.
Yes, for obvious reasons. We're going through DDP.
Take me to slide 9 because I want to try and answer question 2 as to a more longer term view of the situation. So hopefully we've understood something about the quarters. Q4 is the best. Q2 is the second best. Q4 is the best.
Yes.
Q2 is
number 2.
Not number 2.
Yes.
Good. What is this?
So this looks at the history of the currency since 1999, and then so that is in the gold, and then the white one we've just overlaid the inflation data. And now what you see is that we go through a period of stability, and then we get a spike, and that seems to be like.
So sorry, if the yellow line is high,
yes.
is that good for the currency?
No, that's bad. That means we're losing a lot of value.
So in this your chart,
yes.
the higher the line, the worse for the currency.
Yes, in terms of when you're looking at the
because it's a rate of depreciation and rate of inflation.
Yes,
I get.
And we've done a year on year.
So this is 99 rollings.
Yes.
To Kufuor.
So here is where we have the HIPC era. So things were a lot more stable, and then financial crisis. But what you see is that and this speaks for. You can look at this. In fact, we can do the whole conversation just based on this chart because it has various implications in terms of.
So let me guess. Every time the yellow is high, people are not happy.
Yes.
And a government may lose power. So let's try. 99, 2000. This is bad. MPP comes into power. 2008. This is high. Kufuor loses to Mills. 2013, 2014. Doomsday time. NDC changes power, but it's still NDC. So maybe this is the non-trend.
Yeah.
And of course, this went high in 2022.
Yes.
So it's not necessarily correlating with elections.
No, not necessarily.
It's not correlating with elections.
Yes. But what this shows is that we go through years of stability, and then we get a spike. Now this has massive implications for how we invest, the kind of things we invest in, but also it means that there's often maybe a structural deficit in here that keep re-emerging itself. But I think what we're seeing, and when we look at some of the data, it might be too early to say, but there are a lot of positive signs.
I notice you've put renomination here.
Yes.
Renomination, a lot of people believe that the renomination was not necessarily positive in the sense that it just chalked up some zeros,
yes.
but the trend continued.
Yes, yes.
Because I noticed that right at renomination, we have the spike again.
Yeah.
So renomination did not stabilize the currency. It just changed the way people see the fall.
Yes, yes.
Renomination comes, there's a spike here. 2008 financial crisis obviously coincides with this.
Yes.
When we get oil, things are a bit more stable.
Yes.
Election petition, things go high. Doomsday, things are stable.
Yes.
Banking sector cleanup, things are still stable.
Yes. But this area also coincides with a lot of the Eurobond issuance.
We're getting a lot of Eurobonds.
Yes.
So money was coming in.
Exactly. So that re-emphasized on the stability that we saw. So a lot of that obviously came up with itself.
So you call these shocks?
Yes, in terms of the global space, but some of it also being domestic.
So why have you put trade wars and tariff here as a question mark?
Because that's only been happening in the last sort of 3 months. We are yet to sort of figure out, or is yet to present itself in the data.
So it could lead to a blip down or a spike depending on what happens.
Yes, so this is where we will have to sort of take a step back and look at how the dollar has reacted versus other major currencies. So when you look at euro, dollars, yen, on average it's been about 7.8 to around 8% depreciation of the dollar versus some of these hard currencies. In fact, today, this morning, we've seen the dollar sort of strengthen about 1.3%, and this is on the announcement that Trump's team are going to sort of give up 90 days sort of suspension to sort of renegotiate with China. So a lot of what we're seeing in the last sort of couple of weeks and last sort of 2 months or so is on the back of some of it is on the back of what has been happening globally in terms of Trump tariffs.
So to summarize this, we're saying that when the golden line is high, when it goes up, the currency depreciates a lot. So we're saying this is the 2000 situation. We had challenges with cocoa and gold. This is the 2000 financial crisis, Obama being president. This is election petition period. And this is what happened with debt exchange and all the issues. I wanted you to give me a longer term view. And I think for that, we need slide 13 of the currency's behavior since maybe the year 2000. I just wanted to see, because I think you say that even though we have ups and downs,
yes,
we've just been coming down.
Yes. So with this chart, the best way to look at it is that assuming when we redenominated $1 was 1 cedi,
yeah,
right? But you have to just take the inverse and ask yourself, how much is a cedi worth in dollar terms, right? So the easiest way for anybody to be able to replicate this is to just take the daily or monthly numbers and just divide 1 by the latest exchange rate. Good. And then plot it over time.
Good.
Right? And what you see is that since the redenomination.
So this is the Cedi's value to $1.
Yes.
And it keeps coming down.
Yes. So it says that like, as at now we've lost about maybe say 93% of the value. So
wow.
So if you divide 1 by the latest exchange rate and subtract 1 from it, it tells you how much 1 Cedi can get you in dollar terms.
And this is over how many years?
Since 2007.
So since redenomination,
yes,
the Cedi's lost almost all its value.
Potentially. Well, I mean that's where the data shows. But
wow.
But you know, some of this is a gentleman called Chris Beckton wrote a really nice paper on this, and he sort of went into some of these things, and some of it actually it could be predicted, right? So you could take your average inflation over the last sort of 6 years, and there's a concept called the rule of 70, which is if you divide 70 by your average inflation, it tells you how long it takes for your
currency to lose its value.
Yeah, to lose half of your purchasing power.
Okay.
So if you do that and you plot it, what you realize is that you have to constantly be investing to ensure that you protect your value. But again, this is not to pay too much attention to what is happening. It's just whether the observation we've seen in the last sort of month or so, whether this is going to be sustainable or not. And there are some positive signs, but I think we have to be sort of cautious. We have to show cautious optimism, as you say.
Don't forget we had 4 questions. We said question 1, what is the nature of the current appreciation? We haven't really fully answered that. But what we've seen is that we are appreciating against the dollar, the euro, and the pound. And even we are appreciating against the euro in a much stronger way. So it's not just a dollar issue. How does this compare to history? We've shown quarters, Q4 being our best, Q2 being our worst, generally.
No, Q1.
Q1 being our worst,
yeah.
All right? That's the second thing. We're also asking, historically, how has this behaved? And we've noticed that some depreciation has coincided with major events. So whether it's with the global financial crisis, COVID-19, or our own domestic problems like the debt exchange, we've had an issue. This is telling us that on average, since redenomination, the currency has lost over 15% of its value every year. All right? So 1 Ghana Cedi to $1 in 2007, the value of the Cedi to the dollar is close to 0. That's $1. Very, very interesting analysis.
So another way to look at it is that, like, and I like it when some of the older generations still quote the currency in the old terms, right? So really, the $1 is actually 134,000 old Ghana cedis, right? So that's how to sort of interpret it. And the simpler way is just take the latest FX rate and just times it by 10,000.
So when you bring the zeros back, the currency is doing much, much worse than even the Naira and the others. Of course, with the 1 Ghana Cedi, it makes it look like our currency is worth maybe 13 times the dollar or 13.
Yes,
but it's actually much worse.
Yes, and this is where like there's been so much excitement and optimism in terms of what is happening in the last month or so. And there's a combination of factors, some being external, some being internal in terms of what we are doing here. Now, I think that bit is what is worth investigating a lot more. So some of the policies are very, very positive, and it seems like we might be sort of heading in the right direction if that can be sustained, right? So when you listen to what the governor said, that there's been a lot more emphasis. So the currency depreciation has been always around supply and demand of it. The demand of it is always going to be there because of how our currency, our sort of economy is structured. So we are heavily import dependent. It's just whether on the other side, whether we are going to be able to consistently get enough dollars in.
Show me slide 14 briefly before we end this segment. I just wanted to wrap up on this part before I speak to my next guest. What is going on here?
So this is just taking the cedi out of it and sort of comparing other hard currencies. And what we see is that actually the dollar has been strengthening not just against the cedi, but even including the euro and the pound. And it makes sense because the dollar is the global currency. So what we see is that over the course of since January 2000, we've seen that the pound has lost around 37%, while the euro is around 29% of its value. So the general depreciation of the other currencies, or in terms of the cedis, is not unique to the cedi per se. Other currencies have also been losing value.
So dollar is the world's reserve currency.
Yes,
very strong.
I mean, for now,
Okay.
and there's a whole conversation around whether that is going to be sustainable.
So I think we have some answers for the first two questions. The nature of the appreciation, you wouldn't say it's unprecedented, but it's quite significant.
Yep.
Number two, how different is this from the past? We've been taken to the past. When I come back, I'll answer question 3 and 4. Question 3 basically is, what factors are behind the latest surge in the US dollar value, or cedi value against the US dollar? And the most important question for the day, how long will this last? Theo Champon will join us with my guest Cedi Boateng to try and answer those next two questions. Stay with us.
Fire pomudi ni agobi Ghana fu ni age efi say ya your local spices na ya frafra dia ya sankofa natural spice
me de go me jollof mu me mi still ahodoma e ma ne dance
Stanley the barbecue the go on
sankofa natural spice and one you 100% natural.
Adofo, mamu ye huge mistake. Sankofa natural spices.
Remember who we are seeing now. At risk of prostate enlargement. We a member or her 20 ebitimi prostate cancer. 5 bitimi afamu nadia obefamu.
Actually, this is not my fault.
And to wada entina medi mani Executive Prostate Center.
Executive Prostate Center is a unique medical center where we harmonize in-depth traditional medicine with cutting-edge science and technology to cure, to treat, and to prevent diseases like prostate enlargement, prostate cancer.
Executive Prostate Center. Madame facilities no any professional medical care.
Sisi a bibia clear system no ye nro ne so de natural into we koso afama ye.
Executive Prostate Center. My cured.
Excellent. Be that business owner that stands out and is very productive.
You're so confident. How do you do it?
It starts with Built. Where does your confidence come from? Paperwork made simple. Built takes all the hassle away. Don't be like her. Built is your all-in-one simplified finance platform. It's your home for invoices, payments, your payroll, and so much more.
Oh, wow.
Grow your business today. Sign up now at built.africa. Download the Built app now.
Welcome back. So tonight we are back with the economics. My guests are two very interesting people. I have Cedi Boateng, who is you can call the chief analyst for Blackstar Global, one of the world's leading investment advisory firms. Cedi Boateng is a master of using graphics to tell stories, and he's answered two questions for us. The nature of the appreciation is very interesting. It's against the three major trading currencies, the euro, the dollar, and the pound. He's given us a very good historical analysis of the quarters redenomination. Cedi has lost 93% of its value since redenomination, average of 15% depreciation per year. And the time series shows that the Cedi is always trending downwards against the US dollar. I wanted to put up a quick chart to summarize where we are before I bring in Theo. Theo will help us with question 3, and question 3 is essentially what is driving this current surge. But I found this on Bloomberg today, and basically they've put the Cedi, and this is very easy to see. Let me just show you this. So this is how many Cedis you need to buy $1. All right, and you can tell that since May last year, you've needed an average of 15 Cedis to buy the dollar. But from the second week of April, it's come down to around 12-ish, 13-ish cedis. We are praying it gets to 10, which is what it was probably end of 2024. And there's an interesting relationship between how many cedis you need for $1 and the rate of inflation year on year. I'm not going to go into inflation, but that's a different conversation. But you can tell that at some point there appears to be some correlation, because as inflation trends downwards, the amount of dollars you need, cedis you need to buy $1 trends downwards. Some people say that it's because some of our inflation is imported. So if you are producing goods in a country and the raw material is bought in dollars, the cheaper the dollar, the cheaper your input. And the cheaper your input, the lower your price. So there's a certain relationship between inflation and the currency. But that's not why we're here. I wanted to bring Theo in. Theo, thanks for joining us. Are you in London? Are you in Loughborough? Are you in Lisbon? Where are you?
I'm in Scotland.
Oh my God. Great. So what is driving the recent appreciation of the Ghana cedi against its major trade partners?
Yeah, thank you once again, and it's a very important point that you've asked. And I think to really do justice to this, we need to unpack it for me into two broad strands. What is happening externally? So basically, what is happening in the markets outside with the Trump policies and whatnot. And then we also look at what is happening domestically or internally within the Ghanaian front. And then when it comes to that, I'll talk about two specific aspects of that, on the fiscal side and then also on the monetary side. And in the graph that you just showed, the Bloomberg chart and the other currency chart, what is very clear is that hitherto April of this year, we had seen the cedi trading relatively around 15.5 thereabouts to the dollar. And then we've seen this big sharp drop in the last 2.5 or so weeks and counting. And when I analyze it very carefully and look at the dynamics and the drivers, what is very clear to me that the sharp drop that we're seeing cannot be fully explained by what is happening on the global market. In other words, the Trump-induced economic uncertainty and the decline in the dollar, that does not fully explain what we are seeing on the market. Because in any day, you saw the Liberation Day was on the 2nd of April. And normally, the way these currencies trade and the signal mechanisms associated with that, if you are going to have a pass-through on the external side to the local currency, in this case the cedi, that would have actually been picked up in the signal very early on, rather than what we had seen just about 2.5 weeks ago. And that's one important first point to note. The other important point, and which is more fundamental to the decline in the dollar rate, in other words, the appreciation of the cedi that we are seeing, in my view, largely rests on the monetary policy measures that the central bank has been taking, and to an extent, what is happening on the fiscal side of the equation. So let me maybe take a bit of time to expand that a little bit so that our viewers can appreciate it a lot more. So on the fiscal side, we have seen a lot of momentum, a lot of steps that the government has taken to try and restore investor confidence. We saw the 2025 budget. We saw some of the spending cuts associated with that. The IMF just reviewed the fourth review of our current ECF program, and that is going to bring in some additional funding. At the World Bank IMF spring meetings, there was a lot of relative positive sentiment from the investor community as to the turnaround that we're seeing within the Ghanaian economy. And even on the inflation as well, if you look at the data points as you put out there, you actually see that beginning to cascade or come down as well, related to the imported inflation component. Again, I would say that the fiscal measures does not fully explain all that we have seen, because the rate of change has been that drastic just within the last 2.5 weeks. So that then brings us really to what is the heart of the issue on the monetary side, right? What is it that the central bank has done, or maybe not even done, to actually allow us to see a relative improvement in the value of the cedi compared to the dollars? And this is where the sales of the gold reserves becomes really, really important in terms of the additional forex inflows that have been coming through to the market. You look at our export data for gold, and you look at the data from as published by the central bank, and it's actually quite clear that in the last several months of this year, we have actually exported relatively more gold, and therefore gotten a bit more forex inflows to actually support our reserves and support the currency. And this is, for me, if not the most important factor that is driving and underpinning what we are seeing on the FX front. You can also see, again, some additional dollar inflows that have been provided to cover payments within, or that are due within, the energy sector. So particularly for the IPPs, for fuel purchases, and this is actually a bit more than what ordinarily is made available to them. And all these additional dollar inflows that have come in within the relative 2 to 3 week period that we're talking about, then means very basically you've got a bit more dollars that are within the system than you do need. And that is what is pushing the pressure to actually drive down the exchange rate. So I just took a bit of my time to explain.
All right. So I wanted
the external side. You have some movement, but that has not fully explained that. Yeah. It really comes down to the domestic factors. Good. And of the two domestic factors, monetary, fiscal, in this case, it's really the monetary that is driving a lot of the movements that we're seeing.
So I wanted you to speak to what I've put on the screen, because I think this is what you were trying to say, that our gold reserve position, because you're talking about the monetary part of this. So are you saying that the probably the most important factor for the appreciation is the fact that the central bank has been able to bolster its gold reserves, or is
it has bolstered and then it has also sold? So look at the chart. Yes. You could see on a month-on-month basis.
Yes.
Right, going all the way back to 2023 under the NPP.
So you're talking about the chart on top, this one, the one on top,
the one at the bottom,
the one at the bottom.
Okay. That actually shows you the net addition.
Wonderful.
Right, you can see very clearly almost every month there is an addition to the gold reserve. So if you take those lines and you plotted it to the end of December 2024, you can actually see the incremental month-on-month additions.
Okay.
Now observe, from January 2025 onwards, there is still some addition. However, it is not at the same pace or level as the months before, right? So what you're actually then seeing in terms of the net is that you're actually selling some of those reserves to get forex inflows, but it is not, what the net is not as big as what you were adding originally in terms of bolstering it, right? So what this is basically doing, or what is allowing you to do, is you are in a much better position now than you were, say, 2 years ago, even a year ago, to actually make active interventions in the forex market to support your currency. And I mean the data for me is quite clear on this aspect. So what has happened really is that in the last 2 years, we have built up quite significant reserves, and there's even more that can be done. But now we are in a position where you can decide to actually sell some of those reserves, get dollars, and use that to support your local currency.
So I remember I interviewed Kofi Akar, who is an analyst. This is
our good friend Kofi, yes.
And he urged the government to increase what is called ORR, optimal reserve ratio. At the time he wrote the article, the ORR was around 7%. And the time I interviewed him, it had gotten up to probably 30-something%. And his point was that increasing your gold reserves was the best way to strengthen your currency. So in a sense, they listened to him, and this is why we've seen what you're seeing. Now, are you saying that having built those reserves, we are now in a better position to sell some of that, to get dollars, to reduce the pressure on the cedi, which is what we've done in the past couple of months, to then strengthen the currency? So basically, the gold reserves was the bedrock, and now so it's like the strategy, and then the selling is now the tactic. If I'm trying to make sense of why we are here, is that what you're saying?
Yes, but you also have to keep accumulating reserves. So you cannot just be selling all the reserves and you realize that you have nothing, right? And in the environment that we are in now, where gold prices are trading around what, 3,300, I've seen some forecast of even possibly $4,000 an ounce by the end of the year. What that actually allows you to do is to do both of the two things at the same time. So you increase the reserves, but you also have enough that you can actually sell some to get the dollars that you need to prop up your currency. And that optimal mix, or that optimal ratio, per the literature, per some of the evidence, in some jurisdictions, they are going 40%. Some even say you should go up to 60% in terms of that optimal mix. But the important thing is that you build the reserves, you are in a position where you can sell some. You are not selling everything. You can sell some as and when needed to allow you to actually get additional forex. That is more like a short-term, right, or medium-term measure. The more longer-term structural measures comes down to the things that we have been talking since independence: diversifying the economy, making sure that you can actually export and you are competitive, and all of those. Those are more deeper structural things that need to be changed.
I'll take a break. When I come back, I'll ask my guest in the studio to comment on your analysis. Then we'll ask the final question for the day. How long will this surge in the cedi's strength last? This is the point of view. We're speaking to two analysts on the recent surge in the cedi's strength against the US dollar. Stay with us.
In a fast-growing urban environment like Accra, safety is as important as the air that we breathe. Hear the real stories from those who now feel safe like never before with Response One.
One night, I heard the glass shattering. Armed robbers had broken in. Before I could react, the alarm blared and the lights flashed, and Response One was already on their way. Within minutes, the security was at my door and the armed robbers had fled. I never want to be that scared again. And now I know with Response One, I never will.
Don't wait for tragedy to strike. Protect your home with Response One's monitored alarm system and our theft protection guarantee. Immediate response, real protection. Response One. Stay connected, stay protected.
Life is a celebration of moments. Big and small.
The sun is scorching, I'm feeling the heat.
With Piva Drink, every moment becomes a refreshing celebration. From the beach to your home, in every corner of your world, Piva Drink adds a burst of refreshment.
Give me Piva cocktail and tangerine.
Celebrate every moment with Piva Drink. Refreshment for every occasion. Piva Drink. A taste you will love.
P for Piva.
This advert is FDA approved.
Remember who we are singing now. At risk of prostate enlargement. We a member or her. 20 ebitimi prostate cancer. 5 bitimi afamu. Nadia ubefamu.
Actually, this is not my fault.
And to wada. Entina midi Executive Prostate Center.
Executive Prostate Center is a unique medical center where we harmonize in-depth traditional medicine with cutting-edge science and technology to cure, to treat, and to prevent diseases like prostate enlargement, prostate cancer.
Executive Prostate Center. Madame home. Facilities no any professional medical care.
Sisi a bibia clear our system ni. Ye nro ne so de natural. Into we koso afama yi.
Executive Prostate Center. My cured.
Welcome back. So tonight we've asked ourselves 4 questions. We've answered 3 successfully. The final question is where we are headed. How long will this last? My guests are in studio, Chief Investment Officer for Blackstar Global, Ajay Boateng, and Professor Theo Echampong, who's an economist. So we now jump to the $1 million question. How long will this last?
I think the general market has been quite positive in terms of the response from the latest budget. There's a sense that there's a bit more sort of fiscal discipline or commitment to fiscal discipline, and that is, evident in sort of the number of appointments in terms of the ministry.
Cutting down government size.
So I think the market has responded quite positively towards that. We must not also forget that IMF, we're still under IMF program. So there's a little bit more of checks and balances in place. But I do agree with Professor Champong's sort of point on it, because the issue has always been around supply and demand, or your ability to be able to sort of get dollars, which will sort of help you sustain the currency. So the accumulation of the reserves is extremely positive. In fact, when you look at the first sort of 4 months, we are currently sort of, we've sold around like 2.7 billion. If you extrapolate that into the rest of the year, that is around 8.1 billion for the rest of the year if we can sort of continue on that trajectory. So it is positive, but I think the market has been quite positive on some of the changes that the new administration is looking to do. Generally, there's a sense of optimism, even if you speak with some of the external investors. There's a general sense that...
you had a chart that showed that in IMF program years, the currency is stronger than in non-IMF years. I would have loved you to show that, because if you can find the slide number, it will be very interesting, because both of you are saying that when fiscal discipline is guaranteed, somehow the market rewards you with a stronger currency. Once you throw away the checks, the market's like, these guys are not serious. So in a sense, we need the IMF to help stabilize our currency, which is quite bizarre.
Yeah, I mean, I think you have to also take an objective sort of look at some of the policies, right? So one of the core problems that we have in the country is food imports, for example. So if you look at some of the policies that are being proposed, so Nkoko Nkete, for example,
Feed Ghana program.
Yes, that idea itself is actually very good. It's just the question of whether we can execute it. But there's a sense I think is very, very positive if we can actually see it through. So there are pockets of glimpse of hope. You look at the code of conduct which the president is looking to sort of enforce. All of these are determined to ensure there's a little bit more prudence in terms of how we do things.
I think the final question is the most important, which is really the theme for the show today. How long will this last? So when I showed the Bloomberg chart, everybody agrees that from second week in April, the Cedi started getting stronger. So you're buying the dollar around 13.3, 13.4. How long will that line keep going down before we revert to factory settings? I'm going to start with you on this. What would you say? We've done 3 weeks of strengthening, right? So the question I'm asking is, how long will this black line keep going down until it flattens out? This black line that has been relatively straight and horizontal. Big dip. First, you are answering that first. How long will this keep going down before we get back to?
I wish I knew all the answers, because then I would have actually gone to put some bets, some put options right around this and benefit from that. But I think, to be sort of straight to the point, I think that it could go down a little bit further, possibly maybe around the 12th mark, right? And this really all fundamentally, as my other panelists in the studio is saying, it comes down to sentiments, right? Investor expectations. It comes down to those who trade within the market, whether or not you're actually going to be able to balance the supply of the demand for dollars and the supply of it, right, within the country. And I think that if gold prices especially keep being high for the remainder of the year, we're actually in a much better position to drive down the rates much for all of us. Because for me, a sustained appreciation is what we want. What people don't want is the sharp dips and then subsequently it goes all the way back up again. That is not good for anyone at all. And so basically you're planning with a sense that if, for example, it is between 12 to 13 cedis a dollar that you want, then that is what you expect for the rest of the year. And I think instead of being very emphatic about it, I would rather give us some indicators that you can actually look out for. One of them being, if we still see the gold price being extremely high for the rest of the year, I can bet you that the currency, the Cedi, is going to gain further to the dollar. Number two, on the fiscal side, when we come to the half year point, and we're already in May, so in July, the finance minister will come to Parliament and they'll present maybe the supplementary and half-year estimates. If we see even better numbers on the fiscal side, if we see more commitment on trying to rein in on expenditure and some of the things that have been said in the budget that was read in March, again, that positive signal will still feed through to the FX market, and that would further add an additional layer of comfort, and therefore we should expect to see further drop in the currency. It is difficult to forecast where it will fall, but I certainly know that depending on where the indicators would go, we are much likely to end in a much better position.
Okay. So if I hear you,
and then the last point, just a quick one, is for me, what does this do for the ordinary man on the street, my grandmother in the village? And this is where the inflation thing becomes extremely important. The end year target is around 15% or so. If this trend continues, then we should expect inflation to actually drop down further. And that is a credit to the administration and a credit to ordinary Ghanaians who have been suffering for the last 2 years.
Thank you. So you're saying if the gold price keeps strengthening and if the media estimates from Atuforsen continue in the austere, responsible manner, we will be rewarded with a stronger currency. Ajay Boateng, quick thoughts on that?
Yeah, I think I agree with the points that Professor has made. And I think the direction is going to be very, very difficult to determine. But I think the confidence we can take from what has happened over the last couple of weeks is that the build-up of the gold reserves and the commitment from some of the actions that we're seeing with Gold Board to continue to sort of almost be at a point of contact would continue to strengthen our ability to get FX. Now, I agree with Professor's point in a sense that it is very, very difficult to pin it down, right? But my take is that like, can we? I think stability, being able to be stable for an extended period of time, is perhaps more important than the downward trend, because that brings an element of predictability, so you can plan around that. And you know, when you listen to what the governor said the last couple of weeks, you know, his view was more around, okay, he much rather we stabilize it for maybe say the next 3, 4, 5 years at a stable rate, because that means that we're able to sort of plan, and the ordinary person can sort of plan their life properly. But I think things are in place. But another bit that one could sort of say is that, okay, can we use this to perhaps reduce some of the external debt, right? So if we've built up a bit of reserves, could we sort of reduce a little bit of the external debt so that the interest payments that we have to sort of pay actually comes down? Because let's hope it continues, but just in case it doesn't, we might sort of look back and say, hey, maybe we should.
So that windfall should be used to reduce the debt, so that long term, our macro numbers are looking better.
Yes, so that you're building that capacity. The other bit will be, okay, now that we're seeing this downward trend, can we aggressively address some of the structural deficit that we have in the economy? So the food, the energy, manufacturing sector, our education is also one of them. So I think there are positive early signals, and it's whether we can sort of continue to execute.
Wow, thank you very much. We've been talking to Ajay Boateng, who is what's your role?
Chief
Investment Officer for Black Star Global, which is one of the world's foremost investment advisory organizations. Theo Champong is a professor of economics. He's an energy economy expert. He's based in Scotland. He's feeling very cold, but he's happy to join us. Theo, always good to see you. Thank you so much for your insights. Look, let's just do what we have to do to build the country, and may the Cedi be more stable. We prefer stable than volatile. My name is Bernard Avle. We'll see you next time. Bye-bye.